Hello everyone, this is Professor Dhanapal, Assistant Professor, Department of Commerce from Christianity College. So we are going to discuss about the financial literacy. So we'll start with introduction. So financial literacy is understanding and effectively using various financial skills, including personal financial management, budgeting, and investing. So financial literacy is the foundation of your relationship with money and is a lifelong learning journey. The earlier you start, the better off you will be because education is the key to success when it comes to money. So each and every one we required to learn about the financial literacy because always we are depending on the money as well as the financial investments. We are spending more money. So you should know how to handle the money for your personal use as well as for the academic purpose or business purpose, how you are going to spend the money and how you are going to generate the return for your investments. So that's how we are going to study the basic financial literacy everyone should know. Now we will understand the financial literacy. In recent decades, financial products and services have become increasingly widespread throughout society. Other products such as mortgages, student loan, health insurance, and self-directed investment accounts have also grown in importance. So if you take an example, most of the banks are financial industries. They are launching a new kind of services based upon the market demand in the markets. But as you see, you can go for mutual fund, even the investment in the land, or you can go for venture capital, right? Even insurance also, it's one of the investment avenues. So they are having more number of financial product and services, right? So now it's our duty to learn about a different type of financial avenues, what are is available for your investment, so that you can get income in futures. Next. So the many skills might fall under financial literacy. Famous examples include household budgeting, learning how to manage and pay off debts, and evaluating the trade-off between different credit and investment products. So this is a simple concept, right? When you are ready to plan, recording in progress. When you are ready to plan for your budgeting, your family budget, so you will be familiar for how to handle the expenses for your household expenses, as well as you can able to monitor and control the unwanted expenses so that you can able to save the money. The same we are going to use for the business also. So business, there will be a lot of expenses. You will get different sources of income at the end. What we are generating, whether we are getting a profit or loss. So how you are going to monitor that? You have to track towards your budget. So that's why the budget is very important. So actual budget what we are preparing, as well as what is the actual expenses are incurring. So the basic as a student, we can learn through the house only. So you can prepare your own budget, how much income from your household members are generating, how many sources of income you are having, what are the different type of expenses we are incurring for your household expenses from your father and mother or siblings. All the expenses together you can create, as well as you can find out every month. You can identify what is the excess income or excess expenses you have done, so that you can tell them to reduce the unwanted expenses. Right? Now, being a financially illiterate can lead to several pitfalls, such as being more likely to accumulate unsustainable debt burdens, either through poor spending decisions or a lack of long-term preparation. Now, how we can monitor the strategies to improve your financial literacy skills? Developing financial literacy to improve your personal finances involves learning and practicing a variety of skills related to budgeting, managing and paying of debts, and understanding credit and investment products. Let's see different products and services. So first, the strategies to improve your financial literacy skills: create a budget, pay yourself first, then pay bills promptly, and get your credit report, then check your credit score and manage debt. So these are the basic strategies which we can use for your to improve the financial literacy skills. Now, how we can create a budget, right? So to track how much money you receive each month against how much you spend in an Excel sheet, on paper, or with a budgeting app. So now you can see in the place of more number of applications are there to create your own budget, as well as you can track how much you are spending. It will automatically connect with your message. So it will read all the messages. It will track what is your spending, how much income you are having, or else directly you can create a template in the Excel sheet and you can update all the expenses so that you can able to track all the expenses, right? Without monitoring or tracking if you're spending, we can't control our expense. So your budget should include income, paychecks, investment extra, fixed expenses, rent or mortgage payment, utilities, loan repayments, then discretionary spending. So all these you can update and you can keep a check every day so that you can able to track it. Then pay yourself first. It means to build savings. This reverse budgeting strategy involves choosing a savings goal, say a down payment for a home, deciding how much you want to contribute toward it each month, and setting that amount aside before you distribute the rest of your expenses. Next, you can pay bills promptly. So you should stay on top of monthly bills, ensuring that payments arrive on time consistently. Considering taking advantage of automatic debits from a checking account or bills, pay apps, and sign up for payment reminders by email or phone or text. So you have always we are getting frequent messages or reminders from the companies. If you want to pay credit card bill or any EMI, anyway the companies they will remind you, but you should have a proper track and you should remember to pay all of your bills on time so that it will not get any issue for your future purpose. Then how you can get your credit reports. So always the consumers can request a free credit report from various credit bureaus once a year. So you can log in as a customer and you can create your ID. Then you can able to get the request. You can request your the loan providers. Even if you are approaching for any consumer loans credit purpose, they will give you a loan to you, as well as they will generate the credit reports for that purpose. If you request, you can also get the credit report. Now, the most important thing as for checking your credit score, a good credit score helps you obtain the best interest rate on loans and credit cards, among other benefits. So you should monitor your credit score. If you are monitoring your credit score, that will be easy for you. You can control your credit scores. When you are creating a good, healthy credit score, then it's easy for you in future to get credit cards or different types of loans from all the financial institutions. When you are approaching for any loans, even for two-wheeler loans or mortgage loan, credit card loans, whatever it may be, for all the type of loans, maximum the financial institutions, they are depending on the credit score. They will check the credit scores. The credit scores, if you are having more than 850 or 750, then you can easily get the financial requirements. If it is less than 750, they will increase the interest rate. And if your credit score is going down, then it will be very difficult for sanctioning the loans for you. That's why we have to monitor our credit score always. We have to improve. So always you try to improve your credit scores. So how we can improve? You should pay on time all the bills. If you are delaying, if you are not paying, if you are becoming on the NPA list under defaulters, then it will be very difficult. Your credit score will get reduced. Now, how you can manage your debt? Use your budget to stay on top of debt by reducing spending and increasing repayment. Develop a debt reduction plan, such as first paying down the loan with the highest interest rate. So contact lenders and renegotiate a repayment, consolidate the loans, or find a debt counseling program if your debt is excessive. Right. So this is the most important thing where we are lack. We have to manage what are the debts we are having. So we have to consolidate the list of the debts what we are having. So you have to fix the priority, which one you are going to pay first and which is having a less priority. If you are paying high interest rate, so first you settle down that. If you are not able to settle down, at least pay few mean the EMI amount. Whenever you are getting any bulk amount, so you can repay the amount and you can reduce the interest rate or you can reduce the number of EMI. Right. So always you can approach the financial institute, whoever providing the loans for you, or the financial advisor. So they will advise you how you can reduce your interest rate. So you can burden your, you can reduce the burden of your financial excessive. That will help you. Then invest in your future. So if your employer offers a retirement savings account, sign up and contribute the maximum to receive the employer match. Consider opening an individual retirement account and creating a diversified investment portfolio of stocks, fixed income, and commodities if necessary. Seek financial advice from professional advisors to help determine how much money you will need to retire comfortably and develop a strategy to reach your goal. Right? So always you have to invest for your future purpose. So even if you are an employer, you are working in a company, and we are going to save our amount for when you are getting a retirement, you should get the pension amount. So we are doing for investment for the future purpose. So at the same time, if you want increase your return, you when you are working, if you are getting enough money, then you have to go for the portfolio method. You have to identify different diversifications, right? We can go for recurring deposits or post office income, or you can invest your money in the stock market, or you can go for any short-term investments or long-term investments. So you should identify what are the venues are available for your investment. Based upon your requirements, you can choose whether you can go for the short-term or long-term process to get your returns. Right. So thank you. We will discuss with another topic with the next session. Thank you very much.